Okay, I have a question for you, a really important question.
Okay.
Do you know what ITIN stands for?
Yes, it is an individual tax identification number. You may be wondering why we're doing this video in English. We had a discussion about this because a lot of people who have an ITIN, don't speak English.
Yes, but it's important to know and to help others, right?
Right.
So do we get loans with an ITIN number?
You can still get loans.
But
So
how?
Well, it's a specific program, so it works differently. You still need credit. You need to prove that you can be here because, like, I like to tell people this. Like, as a lender, you just need to think. Well, as anybody, why are they getting money? What's their motivation? And how can I use this, like, for me? Everything is a tool, and it works. The economy works because we're helping each other. But what's the motivation? And so, as a lender, I am making mortgage-backed securities. I'm creating an investment for people who want to invest their money. I'm creating a secure rate of return. So if you want to participate, if you want to get good money, you need to be as secure as you can. The more secure, the more vanilla you are, the better. So getting an ITIN loan is a little less secure because you're not a citizen of the United States, right? So there's a layer of risk. So it's going to cost a little bit more, just like stocks and bonds, whatever. They're a little risky. They pay a little bit more if they work out, but if not. So they typically require a little higher down payment, but there's special programs that go either way. And every time I've seen one, the interest rate is higher.
Yes, interest rates are higher. When I saw this loan start, I was like really happy because that would make it so a lot of people can have a house, right? But the the down payment for them, it was about 20 to 25% down, kind of like if it was an investment property. And that made it, and the cap was like $150,000.
Oof.
So it was really hard to get an ITIN loan, and it just barely covered a townhome at that time. So it was a lot of money. It was a lot of risky, but it would be able to happen. So a lot of people was like, okay, we could start. How do we start?
Yeah,
and
have a house, don't have a house. Let's get a house.
Yeah. The first thing I need to tell them is like, okay, you know that number they gave you, the ITIN number, you're going to treat it like if it was a social in the sense of you're going to use it for your credit. And if you're going to use it for your credit,
This
you're going
is
to
super
treat
important.
it right.
Well, and then like I've seen this in multiple industries, but I used to work at RC Willey, and people would come in to apply for credit and say, okay, we need a social security card, and they'd throw down 6. Like, which one's best? And like, ooh. and so it's illegal, just in case you're wondering. But the thing is when you're establishing credit, the number matters.
Yes.
And it's actually tricky because if you start with an ITIN and then move to a social, you want to make sure that transfers.
Yes.
But this number, this one number, is what you're going to file under your taxes and get your credit under, because when you go to a lender, that needs to match.
Yes, that's super important because sometimes we have different numbers for any reason and we don't remember which one we should be using. We should use the same one if that's the one that is going to go into the pursuit of getting a house. And so it's really important. Same thing with your social, same thing. I mean, it's just like your social. So so you have to treat it right. You have to make your payments in order. You have to, take care of all those debts that you have associated with this number. I mean, with any number, but especially with this one that you're
So
trying to
one thing
apply.
that I've noticed that with Hispanics, a lot of times the institutions weren't trustworthy. And so this is a shift. When you're getting a loan from a bank, the bank wants to know that you've got a good relationship with them. So keep your money in the bank.
Yes, super important. You might have the 5% down payment under the mattress. Don't put it there. Go and put it on your credit union. I know that there are some credit unions that are doing some ITIN loans. Not everybody is that easy to go. They have more requirements than others. But just having your money in a bank, whichever one it is, it will show that you are consistent and you've been working, and they see the pattern there, and it's easier for you to get a loan that way.
The other thing is be as honest as you can on your tax returns.
Yeah.
if you can write off stuff, do it. But if you're getting a federally regulated loan, we're going to look at the federal documents. So we're looking at tax returns
Your
to document
taxes.
income. And if you've written everything off and say, I don't make any money, which is great for your tax liability, it makes it hard to qualify for a house
But-
because you've just said, hey, I don't make any
I
money.
don't make money. Yeah.
So look at the repercussions of what you're doing, because things that could be really beneficial in the short term could hurt you in the long term.
Yeah, definitely. I mean, that's something that I also heard. Okay, I need to do my taxes. I have my own business. How do I do them? Like, go with a tax accounting, with a tech preparer that actually knows what you need in order to qualify for a house, because it's important for you to know, because you are going to pay those extra taxes, but paying that extra tax will give you a longer benefit, right? It's kind of like the kid with a marshmallow.
Yeah, the marshmallow test.
Yeah.
One now or two later.
Yeah.
You can always talk to a good mortgage loan officer. They can't tell you how to file your taxes, but they can tell you, if you file your taxes this way, what your documentable income will be.
Yeah.
So you can go in, like all the time I have people bring in their taxes and say, hey, what can I afford? And they're like, well, based on this,
Yes.
this is what you qualify for. And if you want more, this is how I read it. This is where we document income. These are deductions we can add back in. These are deductions we can't add back in. So
Yeah, I mean, it's there. The possibilities are there. You just need to actually know how to do these things in order to get the loans that you need right now. Another thing that I've seen is that they need to have regular employment, right? Like, is it like always with the same employer? How is that?
So it's really what we're looking at, and just look at the other person. Like if someone came to you and said, hey, can I borrow money? And you say, where do you work? You say, well, I've worked here for 2 weeks, and I worked there for a month, and I worked there for 3 months, and I worked there for 4 months, and I worked there for 2 weeks. Like, how employable is this person, and why did you leave?
Yeah.
So the general rule is any more than 3 jobs within 1 year, you're going to need a pretty good reason why you moved.
Okay, yeah. And is it okay if it's like the same type of job? Like if I don't know, I'm a construction worker, and can I go to a different company? I'm still a construction worker. Does that changes, or does that can count as one type of job?
So the type of employment matters.
Mm-hmm.
And this is interesting because if you are a skilled laborer, it matters more. So
okay.
if you went to school to be a veterinarian, and then you're a veterinarian, and then you pursue as a veterinarian, and then you switch and you start your own company, that changes things. But like if you are a worker and you're working at a construction company, and then you're a worker and you're working as a stalker at a grocery store, and you're a worker and you work for someone else, that's all like a worker, even though you're at drastically different companies.
Okay. Well, that makes it easier sometimes, because sometimes, especially during the change of weather, a lot of people can't be on the same job and has to look for another one. They work the same. They're still producing, but...
And there's a lot of people that have seasonal employment. In the summer they do this, in the winter they do that.
Yeah.
So that works just fine.
Yeah, I remember a lady a while ago that we got her a house, and she was a seasonal worker for Young Living, and she used to do the lavender. She would be in the summer, or not the summer, but spring and summer. That would be the times that she would work, and she wouldn't work doing like after harvest. She stopped working, and so. In the beginning, it was a little hard because it was a seasonal job, and so they were like, "Oh, well, she doesn't do this money all the time." But when she figured out that it's like what she does through the year, but in different sets, then it became really easy.
Yeah.
So I think that's the oldest person that I've sold a house. So yeah, she was like 65 or something like that. It was pretty cool. But anyways,
The other thing you do is if you're watching this and you work with people, or the people you hire have ITINs. Help teach them like what they're looking for, help set things up. I've got one investor who buys homes for his seasonal employees.
oh, cool.
And so he'll buy a home, they'll rent from him, and then he kind of teaches them how to get their own home. But you can go in, especially in other cultures, it's not that uncommon to have multiple families in the same house.
Yeah.
I can up to have 4 borrower pairs on the same loan application. So a lot of times they're like, well, we don't make enough money to buy a house. Well, what about you and your friends?
Yeah. or you and your son that's still living with you,
Yeah.
or your mother-in-law that still lives with you. And
Or what happens a lot of times is the parents come over and the children become citizens, and the parents are still just working on their ITIN. The kids can be on the home.
Yeah.
They can get on the loan,
Yeah,
or
awesome.
they can co-sign. We're working on a deal right now
Yeah.
where actually the daughter-in-law is strengthening the application for the parents. She lives in Texas. They're buying a house in Utah, but it's strengthening the file.
Yeah, definitely. There are always ways. You just need to figure out who to talk to. If you have any questions, let us know, because there is a lot more to talk about this.
And this is where it can get creative. A lot of times people say creative financing, meaning like wink, wink, nudge, nudge, let's commit mortgage fraud. But with this, there are really good ways to get a file started.
Yeah.
Sometimes people have come over, they've got income, the income hasn't been on their tax returns for whatever reason. But we can put the right people on the loan. So we're qualifying them at a ratio that typically I would be uncomfortable with, but because I know who will be living there and who can help pay for the mortgage, we'll be willing to push that a little bit more.
Yeah. I mean, like I said, there's always a solution. You just need to figure out what is your case to help you with that case.
Right.
Yeah.
And what are you really okay with?
Yeah, for sure. Okay.